Hello and welcome. It is the completion of the 24th day of March 2020. My name is Derek. This is the Money Charts channel. All bets, trades, and of the like. Well, that's within each's own risk and their own reward. This first chart is GC 1 explanation mark divided by gold star asterisk multiply that of 100. Or it's the price of the futures contracts divided by the COMEX price. And then multiply 100 makes this, or it should be 100 if it's always the same price. So the line for the 100 handle right here would represent where it should pretty much always be. But right now it's 2.2% of a differential within the price, and this has just recently occurred. And it's been as high as 3.7%. Let's take a look at both the charts. First, the one on the COMEX with the price action or CFDs. We'll just say the CFDs. And in this one, it's got the price up to 1640. Very good rally from this low in here. And close to, but not quite, to the twice hit level at around 1683 and then again at around 17. As far as the contracts and the futures are concerned, it's at those retested two hit highs, as today's session came in at 1,698 on this with the previous high at 1704. Why there's a big differential amongst the two? Well, it is what it is. But the price action for it has done very well, whichever way you look at it, in the recovery, this part of the recovery stage. How many of these big choppy up and down movements are going to occur along the way? I don't know, but I'm more confident than ever that these prices are going to escalate possibly out of control. Let me move this on, but let me just say, look at this setup here on the hourly time frame. That's just a sick continue. I mean, this rally that started down here on the 8 a.m. session yesterday morning isn't stopping, and all the strength that it's been showing from the time it's hit this at the 18 highs. 1, 2, 3, 4, 5, 6, 7, and it looks like it's leaving that section, because the one thing that's different compared to this period, at least we'll see if it holds with 35 minutes to play, it's not touching the 18 of highs, where all of these other ones have supported it. So that's what's making this different, lift-off, excitation kind of deal, breaking out from the short-term levels of resistance and doing so near this high and where it corrected from. So odds do favor that it breaks that for a new leg higher. Moving on to silver, 1474 on the futures price. This is at 17. Let me just see what time do we got, because 1473 as far as the actual other silver price here. A little bit different here. So not as much of a differential. 57 from 73, the differential like 18 cents, a little over 1%, but not quite 2. And on this, it's just managed to get up to the 18 average of highs on its rally after just spectacularly large down moves that has occurred. Now, this is some of the things that I've been thinking about within the actual silver metal is concerned. We have the mints getting to the stage even before everything that's been going on, like days and days, over a week ago, 2 weeks ago, from what has been sounding like these mints were just having their normal suspension or delays to the point where, well, things like the Canadian Mint, it's like a normal 24/7, 360 kind of factory, which means it runs continental shifts, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. Usually you have 4 different crews that do these things, or sometimes weekday, weekend crews, whatever, but they're always running. Thus, when the orders get overwhelmed, that means, okay, we got like 2 weeks before, we got 2 weeks of orders, we just got to create to fill. And that's the type of state that a lot of those get into. United States Mint's really bad in that, it seems, historically speaking. But now we have a situation where they're just, we're just going to, because of the current situation, current event in the world, like a lot of other businesses, the mints aren't even going to be making any. And now we're going to have the miners shutting down in gold and silver. Copper mines, which is there's a silver byproduct, those base metals, they're going to stop there. So the amount of actual silver that's going to be coming into the marketplace is, to me, it's just not going to be there, especially if we have a situation where all the main dealers are running out of supply. Who's got it left? That brings it to an interesting situation moving forward. So those are some of the things that I've been thinking that I would think I'd want to share. I really can't say it within the charts because the charts are just doing its normal thing. Although on the hourly time frame, it's got a nicer setup than gold, and it's already had its exitation from the 18 average in here, 1800 hours, but 1473 at this stage. And when you look at where we came from in here, well, the last year at 16.5 in here, and I think 15 and change right in here. This is a key Fibonacci mark too, 1573, because what we can do is we can take it from this. Which highs do I want to use? I can't use this one because this is breakdown highs. I would rather use these highs over these ones. So let me just take a look at these highs at, say, 1892. The lows here at 1164, it looks like, are the lows. So key numbers, $14 and 1572. Okay. So let's just stick in the 14 in the ballpark area. There we have it. So 1572, well, that seems to be where it's moving up towards, or what the next target level might come into play. So as far as today, how we see, what do we have for any type of resistance at 14? Well, we did resist up to this level, have a good correctionary move to the 18 lows, and then just stay within it. There's weak resistance where it gets above it. Actually, if anything, it supported this area for several periods and really escaping over the last little bit from it, really telling us that there's a good likelihood it's now going to come up to this point. Maybe it does pull back, and that's the key word. If it doesn't, if it comes back down, it could be a failed breakout, but it looks more likely that the probability odds do face its next key move being a dollar gain, probably compared to that of a dollar decline. The easiest way of saying favored of up versus down, one way of putting it, which would be like a good pierce now below the 18 average of, good, that too. A good pierce below this Fibonacci line. But yeah, 1375 versus 1575, $1 move. I probably think, 80%? Definitely over 65, I would think, or high percentage probability. Gold to silver ratio was up to over 125. Now still up to and down to, depending on how you want to look at it, 112.5. And this thing, of course, just a large break of multiple hit level of resistance and a significant leg higher from that point. A move that's not too small, not too large, just right kind of deal. Three little bears I've talked about so many times, and well, it's definitely not too small. As far as a break from the range just of the 82. 89, we can see how it had a small move and support in that area, and obviously this phenomenally large play. I think long term, like I've said so many times, maybe this is going to short term go up higher, and I've even thought before going to 150. Who knows, even up to 180, whatever. If that could happen, I don't know, but I think long term, this thing is not only going to retest its previous low of 32, but even go down half value down to the 16 historic, and I wouldn't even be surprised further lower after that. But a move to 32 and 16 coming up forward, I wouldn't be surprised at all. And again, with what's going on, there could be an interesting situation with the physical supply as we move really into the summer months of this year, given, of course, what I just mentioned with the production levels. Let's now transition into the Dow. Up 2,000. Big update today. But on the monthly term, so far, down 18% or so. Well then, that's because of the major volatility that's been going on in the market. Price action still not even up down to the 18, albeit it's getting very, very close, getting above the highs that it had for several of these days, or the last 4 trading days before, above those levels, very close to the 2-day gap series in here as well. The lows have been established in here at so far 10 or 12 or 18,213 highs and lows known after the fact. We'll see these bear markets can be very, it's probably, they're difficult to heal, or they can take a lot of time to heal, but these rallies could be big, sharp, and massive within this, especially as you can see here. This is like pretty much not much of a move when you look at the picture in here, and on the weekly time frame, this is still well extended below this 18 average. As it plays out, that we could still have like 2,000-3,000 more points up, and it's still got a ways to go within this. That the settling of any of this volatility of these 5, 6, 7% moves every single day, not even close. We still have massive volatility. Let's move on next to BTC, but this is Bitcoin dominance first. BTC.D. You can find it on the trading view. And at around 67 3/4 now. And we've seen, after having resistance established here on February 26th, how it just has a wonderful support at previous area of resistance. There's a lot of areas where it was. I mean, so many different points. But it held, stayed above this point, resisted it here. And this point in here, it actually supported on March the 10th, this level of resistance area. Had another test of resistance, test numbers 2 and 3. 2 for the short run then, and 3 cents this one here. And then just wild volatility in here as it comes back down again to these lows, back up to the highs practically on the March 15th and even practically on the March 16th session, but definitely on 17, 18. Hangs in there, supporting within this 18 average of highs, and there's that big excitation date on March the 20th. The pause day, and now boom, 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 continuation days up. And we're just minutes into this session. No, excuse me, this is days almost over, 25 minutes over. So every single day, Tuesday, Monday, Sunday, having the continuous up movements against that, or doing better, of course, over that of the altcoins. And as we take a look at Bitcoin against the US fiat with the Fibonacci lines that I've had in for so long, ever since this thing was rallying up in 2019 or 4. Over a year now, I've had this Fibonacci ratio from this high, or the low here, excuse me, the low of like 31 and the high near 20K. 23.6, 38.2, 61.8, and 76.4% on an exponential level. So then, it comes up to this high on March the 19th, and all of these days of amazing correctionary move, and we can see it leaving this on a nice little breakout-ish type of pattern, that this looks like one of those probable situations that this could have a good gain. And whether it does or it doesn't, we'll see, but it does seem to me that the probability odds looking pretty good. I like on the hourly time frame how this is playing within the 18 average of high since we've came off from these lower areas, even as definitely from this 1400 stamp, but even this 1700 point. Like what happened back in here? Like yes, this move at this level here, how it's recaptured. Just this little brief little short-term move, 67.5 down to 66.25. It's still a couple percentile points, and then the quick recovery, not only to where it came from in here, but how I was able to get above this level from in here, support all this little level. Yeah, it's looking to me as if the chances are pretty good. And different funds like the buck. Well, yeah, that's what you can make a lot of if these things work out. On the like the 3x moves here. And Binance is one place in which you can see if these things go, they can have tremendous moves. And we can see in here 15-minute chart, just all 1500 low here, 1510 whatever, 1710. That's like 13%, just this little tiny range. But the move, if Bitcoin has that type of move I talk about, just keeping on breaking out, well, this would probably go up to like 21, 24, 27. It's a very risky instrument, and it does pop up when you click on it on Binance. At least I've noticed on it that they give you the warnings that these things, they get their asses kicked. They can destroy you so bad, probably to the point that for this to get back to this 18,000 high, I mean, Bitcoin would probably have to get damn near close to its $20,000 high, at least maybe even 15,000, whichever, 16,000, just to match that level. But if Bitcoin ends up going to like stir crazy levels, 50, 60, 80,000, these things probably will on top of it as well. Again, they're leveraged for a 3x move. And when you look at the percentage differentials, you can see a lot of times it can be highway robbery. We just look at this, like up 34 and down 17 the last 2 days. So up 34, down 17. And before that, this was down 33. Now 33% up and 34% down aren't the same. And then the other one was 17% down, and this one was only 17% up. So it's... and to show you the whole point of it, if you think of, like, say, 130, if you have 100 units and it goes up 30%, well, that would equal 130. So the same mathematical credentials of going from this level down to this level is losing 30 on 130. And if we just do a simple calculation of that, we can see that that number is much lower than that 30%. It's 23.1. So a 30% up move is the same in equivalency to a 23 down. But you're going to notice that it can oftentimes even look worse than this. You'll see situations where maybe one is up like 35%, the other's down like 39, or 45% up, 49% down. And then you can even see it just looks so fishy and so bad when you look on the Binance page. You'll see things like maybe Bitcoin is... say down 1%, and yet the bear fund is down 5.6, and yet the other one's up like 3 or 2.5. It's like, okay, this is just not right. And that's just what it seems, that these are very aggressive in that level. But if you're looking for those quick little in and out kind of moves, it's a high risk, high reward mechanism. That's to say the least. And if you hodl any of this type of stuff, you're going to get your ass kicked a lot of times. So let's now finish this off with Bitcoin against gold. And Bitcoin's really going to control the movement of this market, I do believe, although things are very interesting. We'll see with gold now. If gold goes up to like 5, 6, 8, stir a crazy 1,000 numbers, then it's going to have a lot of control of this ratio. But on the daily chart, very similar to how this works within the US, we can see, or the US dollar that is. Monthly chart, we've had the up run, the high point, like the $1,000 Bitcoin or 1,200, the $250 Bitcoin, then Bitcoin breaks 1,000, goes to 20, then Bitcoin goes to 3,000, up to 12, and it's all the same. We still got the exact same, very similar sideways consolidation pattern. So if Bitcoin does really good, then this is going to go up against gold. So this, in its price, 4.15, represents how much gold or how much Bitcoin costs against gold. And you need 4.16 ounces of gold to buy a Bitcoin. And up here, you would need like, if this goes up, or you would need like a lot, like 23 ounces of gold. Or that's how many you would be able to get if, of course, you were to sell Bitcoin, which, of course, can easily be done, at least today. Can be the case. We can see how these were in decimals before, like 0.01, 0.07 in here, 0.59, 0.14. So the volatility of these markets, of course, are phenomenal. So Bitcoin works. This is going to go up. Bitcoin doesn't. This is going to go down. But interesting situation. How is this going to react if gold does have price movements going to those extreme levels? I mean, it could be possible that maybe this just goes up and matches this high when Bitcoin is making all-time new levels, 40, 50,000, but it's only even here because gold is kicking ass as well. That's a possibility as well. But I'll continue to just when it as part of the other charts that I show within all the everything else. Cool to show the Bitcoin to gold ratio. Have yourself a great day. Bye-bye.